The world in 2022, intensifying political acrimony, the highest inflation in more than 30 years, COVID-19 still raging throughout the planet, and the stock market, it's not exactly predictable either. There wasn't even a 10% correction in 2021, yet market participants expressed the highest level of anxiety in years. What do you do when everywhere you turn, the corporate media is shouting market turmoil and encouraging fear? Where do you turn for honest answers and insights? Right here. CB3 Live. We exist to deliver accurate, sensible, and well-sourced educational insights on the world markets, global health updates, and the U.S. economic data that can and will affect your financial future. At CB3 Financial, we don't just manage your assets, we become one of them. Welcome to this month's CB3 Live. Good evening, everyone. Live from Nashville. It's Thursday, April 14th. I'm Charles Brown, Portfolio Manager with CB3 Financial. We're very glad you're with us. Happy Easter coming up, and Passover begins tomorrow as well. So we appreciate you being with us for the Madman and the markets. That's tonight's theme. As you guys know that have been watching for some time now, if I can get the button straight here, we cover a variety of topics on this program, and my singular goal is so that when you begin this broadcast 1 hour later, whenever it is that I finish, that you're feeling better about your financial situation, you're feeling more a sense of peace and calm, and I hope that I have undone what so many in the corporate media are trying to do to you, which is get you riled up and watch their fearsome news. There is a lot to be concerned about in this world right now. Some of it affects the market, some of it affects humanity, some of it affects both. And we're going to cover a lot of that tonight. But again, the goal is at the end of this broadcast for you to feel comfortable about where you are in your investments. And if you still have questions, you know how to reach me at cb3financial.com. These are the topics we cover. For those of you that are new to the program, please do subscribe to us on Facebook. Click the little bell so that you get updates whenever we go live or whenever we post one of our intra-month updates. I'm also on Facebook. I'm on LinkedIn, and I tweet virtually every single day, sometimes more than once, if a lot is going on. So obviously the theme for tonight, or at least the opening topic, is what's going on in Ukraine. The map here is got a ton of data on it, but the most important thing is that the eastern part of Ukraine is what's in jeopardy right now. Obviously, Russia seized Crimea at the bottom there. You can see that with the green dashes on it in 2014. 8 years ago now, and they are trying to basically reclaim the eastern parts, oddly enough, where there are tremendous grain and energy reserves. Vladimir Putin wants to recreate the Soviet Union. We're going to talk about this as we move through this section, but that's what's going on, and that's why it's going on. This is a little more updated map. You can see basically where Russian forces have had to abandon northern Ukraine because basically they were spread too thin. Remember, and if you missed last month's program, you really should go back and watch that. I had probably the first 20 minutes on this Ukraine war. I won't have quite as much tonight because now we're familiar with what's going on. But the reality is that Russia, I think, vastly underestimated how much manpower, air power, tank power it would take to overcome this country. And so they are basically pulling out of areas where they don't have the strength to compete with the Ukraine army. And you can see that with the arrows here. Russia's moved in and then they retreat. They're going to, I think, focus on Donbass and Chernihiv, because that's where, again, these energy resources are. And that's where they're going to start. If they are able to succeed at that and not be driven out, then I think that there are other territories in play, again, because Vladimir Putin looks at what happened with President Ronald Reagan and Mikhail Gorbachev as a huge failure, a huge give up for the Russian people and the Russian Empire. You remember it was Ronald Reagan that said, Mr. Gorbachev, tear that wall down, of course, referring to the wall in Germany. But that, by some in this generation, now decades later, is perceived as weakness in Russia. But there's a human toll here, and I know you've seen some of these pictures, but I just want to cycle through a few more. I just feel outraged when I see, you can't just pick on military targets, can you, Russia? You have to hit this 50,000 tons of deep frozen food in this town in North Kyiv, which is just going to starve people. It's just inhumane what is happening here. Here's a resident looking through the rubble of her house. Most of the targets that you're seeing in the news, and indeed on my program tonight, are pedestrians, residents, non-combatants that are being targeted here. And that's because they're trying to wage a psychological war, which may be a good strategy, but I tell you what, it's turning the entire world against Russia right now. It's rather astounding how that's happening. These look like scenes from, FBI International or something, but this is real life and this is happening. And lots of unmarked graves with crosses with Ukraine flags on them, but not knowing who the people are. And then this woman that lost her husband. And it's just tons of agony brought on by this one man. I do not believe that most of Russia wants this war. I just fail to believe that. Now, for those that are saying, why isn't this administration doing more? I'm actually going to come to the defense a little bit of the Biden administration. I know that stuns you. But we've already sent 5,000, or about a third of our Javelin anti-tank missiles to Ukraine. It's going to take 3 or 4 years to replace that. According to this source on the screen, we've also sent over 1,400, or 25% of our Stinger anti-aircraft missiles, which will take 5 years to replace. Now, Raytheon, Lockheed Martin are the ones involved in replacing these. So we're excited to be holding L&T, Lockheed Martin. I got in soon enough on that. It's in GI. For those of you that are in GI, you can check that out. It's got a real nice return so far. I'm waiting for a pullback in Raytheon. I did not act fast enough on that. But just looking like a really strong stock. Even in the middle of this pullback, they're almost at lifetime highs. So watch for that to appear. I couldn't help but notice that Pope Francis here, it is Holy Week, right, has asked Vladimir Putin for an Easter ceasefire, which in my humble opinion, if you don't know what that acronym means, that's like asking Satan to give up something for Lent. Sorry, a little humor necessary there, but I don't know what the Pope's thinking. Not going to happen. It's not just people that are suffering here. The Russian people, in other words, the Ukraine people, but the Russian people, look at what's happening to their economy just in the first 2 months. Obviously, the first month, February, the second blue bar represents the downturn in March. And certainly it's going to be bad for April as well. But they're being hard hit by this basically one-man agenda because of the massive economic sanctions against the country. Now, I think it's important that you understand that Belarus is in play here as well. So Belarus is a former satellite or member of the Soviet Union, and they basically gave up and repartnered with Russia and is assisting Russia in this. Okay, Ukraine, you can see on the map, is right below that. So, when I see this in the news, and this is a good source, I use Daily Chatter and also GFP, George Friedman's outfit, Geopolitical Futures. But basically, the Russian soldiers are pilfering and then selling these trophy items, which might just be refrigerators, household appliances, etc., up in Belarus. So, how people can do this with no sense of conscience just flabbergasts me. I mean, if you're going to have a war, why aren't you just attacking military tactics, or targets, I should say? Use the tactic approach of attacking military targets. But that's not what's happening here, and that's why you're seeing so many calls in the media for war crimes trial. I don't think Vlad's going to show up for that, but this war is very young. I wish I could say this was going to be over by the time I do this program next month. I don't think we're anywhere close to that. So just today, the 14th of April, the day of this program, Russia has threatened to deploy nuclear weapons in and around the Baltic Sea. Now, they're not saying where they're going to land, but they're going to do that if Finland and Sweden join NATO. Now, I'll talk a little bit more here about Finland and Sweden, but I think that's an empty, hollow cry. Finland and Sweden should be members. They are members of the European Union, but they have never actually applied and been accepted in NATO. Most countries apply for membership in the European Union and NATO at the same time. Obviously, one is an economic relationship. The other is a military protection relationship. So the Russian warship Moskva, this is just what's happened today here, got hit by Ukrainian missiles, which is really great in my opinion. Russia has a different take on it. They had some technical problems that kept the ship from doing what it was supposed to do today. So the next target, and again, I'm mentioning all this because I know that you understand the human context of this, but when people's psyche are focused on the terror that's going on here, it makes them fearful in other areas of their lives. I need to say that again. When people focus on something that is as dreadful and as horrible as the visuals that we're seeing, I would argue the worst attacks we've seen since World War II, and those of us that are relatively the same age here on this call, for you young ones, I understand. But we've seen bad things in Afghanistan and Iraq, Syria, but nothing like this, in my opinion. I think Vladimir Putin's next target are going to be what's known as the Balkan states. Now look up above. You'll see Finland, you'll see Sweden. We'll get back to them in just a minute. But these Balkan states, and they're basically said that because they're on the Baltic Sea, they withdrew from the Soviet Union and they don't want to go back. They have no interest in going back. It's no surprise that they're at the diplomatic forefront of this because they don't want to be part of the Soviet Union again. Okay, they basically pulled out with Joseph Stalin absorbed them. I mean, they had to succumb to him, but then when the U.S. freed them. And then, of course, in 1991, when the wall came down, the Soviet Union absolutely collapsed. And these states took this opportunity and joined the European Union and joined NATO. So whether or not we respond with military action as the U.S. or NATO with Ukraine, because they are not in NATO, we definitely would respond if Russia were to attack these entities. Notice geographically where they're placed. They do touch Russia, just like Belarus, just like Ukraine. But up above, Finland also touches Russia. Interesting about geography, Norway to the far left touches Russia, whereas Sweden does not. So Sweden has traditionally been what we call the Nordic Switzerland, meaning they've been independent for decades and really didn't want to join NATO and certainly didn't want to partner with Russia. Finland has a 1,400-mile border with Russia, so they're in a little more precarious position. But I believe both of them will apply and immediately be accepted into NATO midsummer, okay? It's not the Western organizations like NATO and the European Union, both of which I just spoke about, that challenge the Kremlin, okay? It's the socioeconomic model that we've enabled here in the West, and it enabled us to win the Cold War, that's enticed Eastern Europeans to say, hey, we want what the West has. We don't like what life is like here in Russia. We want to live how they're living, okay? When he became president of Russia in 2000, in the wake of, as I've just mentioned, the Soviet Union's collapse back in the 90s, actually 80s, really, Reagan took office, and then by the end of that decade, the Soviet Union had collapsed. Vladimir Putin inherited a very broken country, and he wants to rebuild that. I make the comparison to how Adolf Hitler rose to power in the late 1930s after Germany's humiliating defeat in World War I. And Hitler's position was, we're not going to stand by and take that, guys. So what is it that is driving this man to do what he's doing? That's something we can contemplate on as we watch this film.
After weeks of intense fighting, Russian forces began retreating from Kiev and other cities in northern Ukraine in early April.
They'll not be able to touch any of their money.
Western leaders announced more sanctions on Russia amid allegations of war crimes. And the impact of the financial penalties is spreading through Moscow's economy, causing inflation, job losses, and import insecurity. But despite the setbacks and stiff resistance, Russia is persevering in its invasion, and most Russians still support the war in the former Soviet Republic, home to vast quantities of wheat and grain, as well as untapped oil and gas reserves. Those natural riches, paired with deep political, economic and cultural ties, have made the country an important and prized target for Russian President Vladimir Putin, who has vowed to fight a pro-West government in Kyiv and bring Ukraine back into Russia's orbit. So why is Ukraine so important for Russia? For years, Putin has attempted to reassert control across the former Soviet sphere, following the demise of the USSR in the early 1990s. But Ukraine, which sits on Russia's western flank, has long been the primary focus. Its vast plains have historically acted as a buffer between the European powers and Russian territory. Its rich agricultural assets have previously benefited the region. When it was part of the USSR, Ukraine produced much of the wheat consumed in the Soviet Union. The country's mineral-rich soils currently yield 10% of global wheat exports, 14% of corn exports, and about half of the world's sunflower oil, according to the US Department of Agriculture. And it has a wealth of untapped energy supplies. Ukraine holds the second largest known gas reserves in Europe, some of which are located off the coast of Crimea, which Russia annexed 8 years ago. In the years since, trends including the growing use of the Ukrainian language instead of Russian has alarmed the Kremlin. The 2014 conflict came after the ouster of a pro-Kremlin leader in Kiev. Moscow saw Ukraine as becoming more closely aligned with Western institutions, such as NATO and the European Union. Russia believes that it has a historical claim over a major part of Ukraine, with one state TV report even spelling it out using a graphic map. It said the land highlighted was given as gifts from former Soviet leaders. Putin has endorsed that view.
Современная Украина целиком и полностью была создана Россией.
Putin has said his objective is to defend Russian speakers in Ukraine, especially those in two self-declared republics of Donetsk and Luhansk, which broke away from Ukrainian control in 2014 and which the Russian president has recently recognized as being independent. Putin has falsely claimed that Ukraine needs to be liberated from Nazis, a claim Kyiv strongly denies. And Putin's popularity appears to be on the rise. His approval rating is at 83%, up from 69% in January, according to the independent pollster Levada. More than 80% of responders said in a poll that they support the war. With the invasion of Ukraine, Moscow is seeking to take back some control in its former sphere of influence.
Okay, so you saw that data about the percentage of Russians that support the war. How many of you believe that's true? And if you do, there's a bridge in Brooklyn that I would love to sell you for sure. So Ray Dalio asked just a couple days ago, how is the first battle in the war for control of the world going? Question number one, how can we tell if Putin and Russia won or lost this battle? Question two, can we tell how powerful American-led sanctions are? And will other nations align with either side or remain neutral? That's what you're seeing playing out with the Scandinavian countries and not Belarus, but we'll see where Ukraine comes in on this. Will they join NATO? I don't know. I want to welcome Leo Klinstein, who is really the authority here as a Ukrainian himself. He mentioned earlier in the chat that Russia already has plenty of nukes in the Kaliningrad area. On the Baltic Sea, there's no new threat there. Well, okay, I'm never going to debate anything with Leo. So if you guys have questions and I'm busy talking, just ask Leo in the chat. He'll be glad to answer. And he'll come back on if this continues, either in the May or the June episode, and we will continue to talk about this. But that's really where we are right now. Okay, so the monthly market review, I've shown you this, but I want to show you again We're not near any of these drawbacks right now, not even close. Remember recency bias that I talk about all the time. These big declines from 1870 to the present, and I realize 2020 is not quite on the map here. We did have a 37% drawdown in 2020. We're nowhere close to that now in 2022. But just realize that's part of normal behavior. And in fact, since the war began, America's markets have performed much better than the Euro stocks, the FTSE, which is Britain, and the MSCI emerging markets, which would be those emerging Asian nations. So the green bar on top outperforming the other markets. People look to the U.S. in times of stress and turmoil for investing, and that's why money comes in here. Even with the market down, it's down worse in other places. Now, there's a ton on the screen here. All I really need you to pay attention to is the red width of the drawing there, which is a recession, and then the market bottom that I've highlighted with a blue dot, or a blue line, I should say, and an arrow. What's the point here? If you're thinking, gosh, we got to get through this war, and then there might be a recession, and then when the recession's over, then the market's finally going to come back. The market's going to pre-date all of that. Okay, so the market is going to go ahead. It's going to look into the future. It's always a precursor. It's a forward-looking indicator. I'm trying to say that in enough ways that it makes sense, all right? So long before the end of the recession, the market will have turned around. It could be that all the low damage has been done. There was a low on January 24th, another low February 24th, another low March 14th, and we've now just been basing in a range here. Is it possible that we could take out that February 24th and March 14th low? It's possible, but I don't see that right now. I don't see that that's in the cards, but it could be. We will see. Even in positive years, guys, in the S&P 500, the index experiences a maximum peak to trough drawdown of about 11%. This year, we're almost at 13. After a correction of 10 to 15%, the index has experienced a one-year gain off the lows of 22%. And it's done this 12 out of 13 one-year periods. Don't let recency bias, don't let the media get you discouraged. This is actual hard data. Check the source. The average stock market gain for 1 year after the first rate hike from the Fed, we're going to talk a lot about the Fed going forward here, has been about 11% going back to the last 8 cycles dating back to 1983. So we have this perfect storm. We still have COVID. And in fact, it's interesting to me that it really has just gone crazy in the East, in China, which kind of makes you wonder if they had synthesized this and put it into the system, would they have let their own people die like this? Probably not. So I think this is metastasized, certainly from their point of view, to a greater degree than they ever thought it would. But you've got COVID, you've got this war, which even just 2 months ago we didn't have. We have this inflation issue, and now we have a new earnings cycle because on April 1st, we start a new quarter, roughly around April 12th, 13th, we're the 14th today. We're already getting some earnings, so I would say maybe the 7th or the 8th, and we'll see that later on. But they're actually a little bit better than I thought they were going to be. And that's one of the things that continues to hold the market higher. I got such positive response from this last time on the March show, and then I did it in my March interim show. This is I said on here, power users, grab this with a screen capture, okay? So if you put in $10,000 on January 3rd, 2000 and left it fully invested no matter what happened, and we know that 2000, there was another bear market in 2001, bear market in 2008, 2009, pretty big pullback in 2016. But if you just left it in the market all that time, you'd see a return of about 6%. Doesn't sound like much, but that's just riding. All right. We're obviously trying to outperform that, and we have. When we show you the performance, you'll see that. But if you miss the best 10 days, you get out of the market because it's just feeling like, I just can't be in here. It just feels awful. Okay. Now you're looking at about a 2.5% return. You miss the best 20 days and you break even. Now, what usually happens when you miss the best 10 days or 20 days is you're out of the market, and then the market makes one of these 10 or 12% massive up moves from a low. And we actually saw some of this on February 25th, 26th because of that February 24th low. And we saw another move up March 14th when it looked like that was going to be what's called a double bottom. We'll look at that in a little bit. Okay. So most of the time we're invested, folks. This is why we don't sit on the sidelines in massive amounts of cash or even significant amounts of cash as long as we remain in a secular bull market. I've talked about that a lot on all of my shows. Go back if you would need a definition of that. And I look at data like this. What has the S&P 500 response been to geopolitical events? Attack on Pearl Harbor, absolutely the worst one. Took over a year. 307 is 307 trading days. So there's 252 trading days in a year. Iraq invades Kuwait. That was a recession that took 190 days. But look at the rest of the data. It just doesn't take that much time to recover from a geopolitical event. And that's because geopolitical events, while they are psychologically disrupting, they are not the essence of how we make our decisions to invest in the stock market. It's a big sideshow. I'm not demeaning that there are human lives, tens of thousands of humans' lives that are dying right now, some of which during this program. I'm not doing that at all, but I am saying that the market, which is what this program is about, mostly counts on the data from earnings and interest rates, which is why you see in most cases on this chart, the recoveries are pretty swift. Okay? All right. This is a cyclical bear market. It is in the NASDAQ. It's not in the S&P just yet. Okay? It's not secular. It's a secular bull market. Cyclical means one cycle. Secular means multiple business cycles. I hope I'm on camera when you can see that. Okay, we remain in a secular bull market. I'll be pointing this out, and we'll have cyclical bear markets. We may even have a recession. Remember, we had a recession in 2020. February 23rd, high of the market. Okay, March 23rd, no, February 18th, sorry, 2020. March 23rd, 2020, low of the market. We had a, 4-month recession, okay, and pulled right out of it, right? Could that happen here? We'll see. There's a lot more going on. Back then, everything was great in the economy with the exception of COVID, which is pretty bad. Now we have multiple factors, okay? This is the normal report that I give you, and you'll see the 73% that you guys should probably know this by now, right? You see the upper left-hand corner there? Well, it's actually on the right-hand side, but left-hand side of the column. 79% of the companies reporting, but less than 5% of the S&P is reported. It's kind of like, election night, with only 5% of the precincts reporting. It takes at least 2/3 to 3/4 of the quarter, meaning through the end of May through the first week of June, to bring in all the earnings reports of the first quarter. And that's how we know how close companies came to performing where they projected the last quarter. Right now, we're at a 79%, which is certainly better than the historical mean of 73%. Industrial's doing well. Technology, 80% beating. I like that a lot. So this is where we are year-to-date performance-wise. I always bring this up to date. You guys watching the show, if you're clients, you're in one or more of our programs highlighted in green. Just this year, we started to trail the S&P by less than 1%. So I'm not really concerned about that in capital growth. Strategic growth's had a little tougher time of it. But again, we are positioned for growth. I believe we are in a secular bull market, and it's going to take probably through the third quarter and into October for the market to really take off. What's going to drive that? I think the war will be over. I think inflation will be tamed. We go to inflation next year in the next segment, and I'll explain my thoughts on that. And so that's why we remain positioned. We did take a few defensive positions in CG, which have worked out well. One in GE with Lockheed Martin. So I'm going to pause here and check the chat and get a sip and see if I can answer any questions. We're on a 20-second delay, so start typing before I go to these breaks if you want, and so I can be sure and answer your questions. Nelly, I agree. Russians are too afraid to speak out. No question. No question. And that's why I think even the reporters are too scared to say what the real truth is. Because wasn't somebody the woman that ran on the screen during that TV show, she was found in a suitcase, obviously dead. These are vicious people. And I don't mean the Russian people. I mean the Kremlin is who I mean. So I'm probably putting myself at risk saying that. So, all right, guys, no questions. We'll go forward. So lowered expectations. This graphic I've been using pretty much the whole year after January anyway, once the market high was in January. Doesn't mean it's going to be bad. Doesn't mean it's going to be negative. It just means it's not going to be like the last 3 years. And if you need to see data on the last 3 years, go back and look at last month's and February's presentation. Bull markets are born on pessimism, grown on skepticism, mature on optimism, and die on euphoria. What a great statement. Sir John Templeton, Google that guy. He's really interesting. He's kind of Warren Buffett before Warren Buffett. But we are not at a euphoric stage right now in this market. So it's pretty hard for a bull market to die. We have tons of pessimism and tons of skepticism. That means there's room to the upside, and that's why I'm encouraged. So the world economy, we always look at the employment situation. We're actually a week later this year, so it was 2 Fridays ago that we had the unemployment data. Look at this spike. That huge blue line was 2020 when basically the country just shut down and 6 million people filed for jobless claims. Well, now we're at a 1968 low as of 2 weeks ago tomorrow. All right, great data. Is that leftover from Trump? Is that Biden? Or is that just the U.S. economy? Probably C, the U.S. economy. Regardless, it's great data. Initial jobless claims on a weekly basis just continue to drop from February 2021. It's really tough to have a recession when people aren't filing for unemployment. So go back to this and you see that huge spike. That portended a recession, and it was really slight, and that's because it corrected so quickly. You guys have heard me talk about a V-shaped correction. This is an inverse V freak out in the jobless claims, and you can see that it got back to a nominal level, okay? Like back to where it was in 15 and 16, actually a little bit lower, right? So good data. Good data here. U.S. job openings. I want you to look at the recession. See the gray bar there in 2020? Again, a very short recession. Notice that job openings were going down, okay? Meaning people couldn't find work. Now, if you were to go back further into 2008, 2009, you would see a plummet. And that's what has recessions being so feared is people can't find work. But notice that we're at highs. We're at decade highs on the number of openings. There's a viewer of this program that told me today before the program, he's interviewing for 3 companies. He has 7 interviews tomorrow because some of these companies require multiple interviews. He said, I've never seen anything like this. And I paid to have my resume updated, and I couldn't even get it back in time to send it to them once I put out my data on LinkedIn. And it's just crazy. It's just crazy. And this is a relatively young person. So if you want a job in the USA, you can find a job. You might be hearing about recessions and, gold's going to the moon because inflation is going to cripple this country. That's not what the job market's telling us, folks. Americans continue to quit their jobs by the millions. The Great Resignation, of course, has been dubbed this, all right? And it's been trending this. In fact, 48 million people left their jobs voluntarily. People don't do that unless they either won the lottery, they got a huge inheritance, or they're confident that they can get another really well-paying job. All right, the monthly high of 4.5 million quits was seen in November 21. I don't think that's going to be the lifetime high. I think you're going to see more as we move in to the deeper months here, May and June of this spring. I think the Great Resignation is not done by a long shot. All right. Thanks for the graphic comment, Doc. So good to be here. Last TV. Not sure who that is, but we're glad you're here. That may the first not be last. Something like that. Inflation, guys. I am not a fearmonger on inflation. In fact, I am irritated at those that are. Yes, you see this data. Here's the CPI. Remember, CPI stands for Consumer Price Index. Is it at a 10-year high? It is. Is it at a 40-year high? It is. Is it going to stay here? It is not. All right, so how is this metastasizing itself? Well, the number one way that consumers are seeing it is in the cost of energy. And snark warning here and a little bit later on in the program, those dark states that you see there are blue states. They're not red states. And they're the ones that have high prices. And they have high prices because they charge so much tax on a gallon of gas. Notice all the green states in the middle, okay? So the inflation that we're seeing is the cost of energy that's going up, added to horrific taxes added by these big blue states. And yes, I see Florida's down there in orange and et cetera. But nonetheless, that's how it's affecting us at the consumer level. At the producer level, so the PPI, Producer Price Index, highest number on record. All right, is this going to stay? It is not. All right, and I'll explain why in just a little bit. You can look back at the graph, see the huge drop that we had in the first quarter of 2020, and then it's been picking up ever since then, okay? Survey was for a 1.1% increase. It was actually 1.4. But here's the data. Well, I'm going to give you an example. So this was actually sent to me by one of my clients who is in the trucking business. He said, he basically sells trucks and leases trucks to people that are either first time or, coming back to get an additional truck or replace their old truck. You don't need a college degree or a high school degree. If you can get a chauffeur's license, you can drive for Walmart for $110,000. That's the compensation, not including the medical benefits. I mean, you're looking all in here at probably $135,000. You could be in your early 20s in making this. That's what supply and demand is doing right now, and that's how PPI is playing out, all right? But inflation is affecting our spending habits. Now, we are a consumer-driven economy. You guys have heard me say this. There are three components, three and three only, to GDP, gross domestic product. The gross domestic product is the total sum of all goods and services produced here on American soil by American companies and foreign companies. It's what's produced on our soil. Okay, so if the consumers are not spending, it's a problem. If they're spending on items that they have to buy, it's not as good as if they're spending on items that they want to buy. Why? Because if you're feeling good about the economy, you might, eat out 3 times a week instead of once. Okay, but you're probably not going to go, I'm all scared now, but I'm going to spend on my staples. I'm going to buy more toilet paper. I'm going to buy more toothpaste. No, you're not going to do that. All right, but this is how the spending has been rotating. Look where it's going: groceries, utilities, education, childcare. I have a child that is in the nanny placement business, and she said, we're hearing from our clients, we're just having to allocate more money towards our nanny cost because it costs so much to get a nanny in a home in a metropolitan area where she works. And we're just not able to spend things on electronics, technology, travel, clothing, etc., out of home, dry cleaning, etc. Now, I don't think this is a long-term trend because, frankly, Americans want to spend money. They're all about themselves. Present company excluded, I'm sure. But what's happening is this shift right now. Again, we've altered our portfolios so that we are a little more focused on staples, a little less on growth, but we expect to flip that back by the end of this summer as each of these conditions that I've told you about, from the war to inflation to earnings uncertainty to the political uncertainty, what's going to happen in the midterms, as these concerns ebb, Americans will bring back what's called a positive consumer sentiment, and you'll see this chart flip. They'll spend the same or less on staples and more on things they want to buy. So am I seeing signs of an inflation top? And I am, and I'll show you why here. So there's a small cohort in the investing community, and I'm one of these, that sees inflation moving down from here, not up, but down, with oil pulling back from these extreme levels. Oil topped out, I think, at 113. Somebody will correct me that's watching the data here. But the world benchmark is Brent North Sea crude, and then West Texas is the U.S. standard. But both of those have pulled back from extreme highs. Funny, the price at the pump hasn't followed that, but that's another discussion point. The swing from tight supply to goods basically could be rapid and dramatic. And I think that we are seeing a longer time to recover from COVID because there have been so many variants. I didn't expect, maybe nobody did, to have so many variants. And we're still seeing more that are being introduced, although they don't seem to be plaguing American shores as much as they are overseas. Okay. So here is a chart that is really important. We're going to spend some time on this. Let me check the chat line here. Leo, I certainly cannot get inside the heads of 103 million Russians, but my anecdotal evidence is suggesting that there's still a very strong support for Putin. I'm going to defer to you on that. It seems almost incomprehensible to me, but maybe they know a different Putin than we do. But I'm gonna go with you on that, Leo. Maybe 83%, as reported in the Wall Street Journal video that I played, is somewhat on the high side. But the population has been subjected to unrelenting, vicious Russian imperial propaganda for over 20 years. Yes, they have. And that's part of the problem, of course. They don't have a free press. They don't really know what's going on. So the 83% could be being misled by the media, or it could genuinely be, but there's 83% of the people supporting him because they just don't know any different. Using the latest media tricks, yes, sadly, I have to believe this data. This is what the majority of Russians have chosen. It's a choice. It is, Leah. It is. So, again, guys, any questions? And specifically for Leo, spent a lot of time in Ukraine, left Ukraine, immigrated to the U.S. Those of you that have been watching my program since day one, Leo's been on here at least a couple times and told his story. It's great. So probably time for him to come back. But I want to show you now this inflation chart. So I know there's a lot of numbers, but just follow this. So look at the monthly CPI. We started seeing this bump higher in September of 2020. So there's the monthly increase numbers, okay, month to month to month. There's no annual number because you have to get to a year before you can have an annual number. So in August, right, so September, the 12th month would be August. Now we have an annual core CPI of 3.9, all right? So September 2021, 3.97, 451, 485, and you can just see this just keep rising and rising and rising. And all this time, the Fed is doing nothing because they're convinced it's going to be transitory. I agree with them that it's going to be transitory, but their idea of transitory was a few months. I think this is probably 12 to 15 months. Not that I want to, advise the Fed. But here's the key data point here. So in March, the data that just was released is 0.60. That's how we get to this annual rate of 6.53 trailing. But what's going to happen is the next month is going to get lopped off. So that 0.31 for March 2021 is going to be lopped off. A trailing 1-year average, you don't have 13 months in it. You only have 12. So we're going to lop off that the 85. We're going to lop off the 75, 0.75 and 0.80. And then we get into more reasonable numbers. So what's going to happen? The annual core CPI will drop just because those, quote, bad months are falling off the 1-year trailing average. You will never hear this on CNBC, CNN, and the other agenda-driven news entities. Washington Post, New York Times. But this is the hard data, okay? This is the hard data. We will see demand and supply get in sync with each other, and things will get much better fairly quickly. In COVID, guys, I just got this from one of my clients today. This report from National Bureau of Economic Research and Johns Hopkins. Basically, it was kind of a bombshell to me. Released this data compiled from every state. What was the outcome of state economies and the educational systems, private businesses, with those that imposed harsher closing of businesses, mask mandates, et cetera, but definitely closing of businesses? Well, the worst states, and they are in blue, New Jersey, California, New York, and Illinois. What a shock. Okay. The best were Utah, Florida, Montana, South Dakota, and Maine. Maine is a kind of half blue, half red, purple state, if you will. But the use of mask social distancing was an extreme usage in big blue states. It improved the mortality rate by just 0.01%. I had to see this data to believe it. Even if it had been 0.1, that would have been not enough to put us through the misery that when I was living in Illinois, we went through. But 0.01%, no, it's just not worth it. So that means that these strategies were essentially equal to those states who had much more freedom-based approaches on how much they were trying to control their citizens' actions, like Utah, like Florida, Montana, South Dakota, and many of the Midwestern states. If you want the source of this report, I can get that to you, but I think that is pretty telling about if and when this happens again. Certainly hope it's not in my lifetime or my kids' lifetime. Maybe the U.S. ought to think about how we approach that. The data is here if you want to do a screenshot on this. It's a pretty good update from Johns Hopkins. So total cases worldwide, just under 500 million, just over 500 million, I should say, at 501 million. 6 million deaths, so we're just a little over 1%. This is less than, percentage-wise, the plague of 1918, so from 102, 3 years ago. As bad as this seems, again, recency bias. This has been handled better. You would think so. It's 100 years newer medical technology. So U.S. definitely number one in the number of deaths, but it's not a surprise. We also are probably more honest in reporting that than India or Brazil is. Just my 2 cents. So the trend is down. The number of cases, the number of deaths just continue to drop, and this will eventually fall off the grid. I'm hopeful that next year's opening video does not mention COVID at all. I'm hoping that. So politics and policy. Why do we mention politics? Because politics leads to policy. Policy affects our portfolio, and our portfolio affects our personal life. Snark warning. Okay, if you don't like snarkiness, you probably want to hold your ears for this for the next 7 or 8 minutes. A Rasmussen poll Tuesday, daily presidential tracking poll shows that 40% of likely U.S. voters approve of Biden's job performance, 58 disapprove. This is worse than Jimmy Carter at this point in his presidency. Latest figures include 20% strongly approve of Biden and 47% who strongly disapprove. Gives him a presidential approval rating of -27. There is no chance that the DNC, that's the Democratic National Committee, will allow Joe Biden to run in 2024. It will not happen. Okay, what is the most important issue to Americans? What do they want from their president? 50% say inflation and economy. 25%, that's half. Russia and Ukraine, and then immigration, border security. Now you hear that all the time with the borders being wide open and porous, but Americans not that concerned about it, okay? Coronavirus is way off the chart, down out at 5%, okay? But inflation and economy, one of the issues with inflation is energy. We've already talked about that. So a really simple question is, if OPEC won't increase oil production, then why aren't we going to Texas? Why aren't we going to Alaska? Certainly Alaska, the state of Alaska, and I have this statistic in last month's video. Go back and watch it. North Dakota, Oklahoma, they can pick up the slack. We have the capacity to produce all the crude oil that we need for America's use and then some. We were the world's leading exporter of crude oil and natural gas in the last year or so of Donald Trump's, where we were energy independent. Don't quote me on that. Were we the leading exporter? We were energy independent and a net exporter during the last year of his administration. This is from a longtime viewer who says, basically, I've got this truck and I'm picking it up in Montana. It's got a 2 kilowatt internal generator with a 36-gallon fuel tank that will run nonstop for 2 days. That's why he's not getting an electric truck. He said, I suppose I could make money driving the highways, charging electric cars that run out of charge, or not fuel, but charge. So, yeah, I don't know how to respond to this other than I suppose that can work in the great western states. You're not going to run out of a charge if you're driving an electric car in an urban area, but it still seems to me that the electric craze, and I've got actually some really good data here from Tesla coming up, is going to be the last. The Western states are going to be the last to probably embrace that unless the refueling, recharging stations got there. Couldn't resist this. Another one of my long-term viewers said, you can always talk about socialism. The number of socialists who leave America every year to escape capitalism, 0. Completely agree with that. You may not. Again, I already gave you my snark warning. There he is, Elon Musk, the world's richest man, and he has a bird behind his head. And that's because he bought 9.2% of Twitter and was offered a position on the board, and he accepted, and then he turned it down and said, maybe not. And the reason is because I'm thinking I'm going to have a hostile takeover for your company. And just before I went on the air, I got a notice from Interactive Brokers, those of you that are clients that have CG, which would be all of you, might get the same notice saying, notice of hostile takeover, Tesla taking over Twitter. I mean, it's big time when the SEC requires that goes out. And I know it's been in the news, but it's another thing when the SEC says this has to be declared. So there he is, apropodict, okay? Did you get that right? Apropodict. Okay, the word of the day, clearly established or beyond dispute. And guys, I've been a huge Steve Jobs fan for years. Here he is at 50 years old, the greatest entrepreneur in American history. It's astounding what he's done. And I'm not a huge fan of Elon Musk. I'm just acknowledging what I see. This whole Twitter play is basically him saying, I'm tired of the one-sided media slant with the corporate media totally behind the far left and the Democrat Party, and I want to even this out. I don't even think Elon Musk is a Republican or a conservative. I think he just wants to see a more level playing field. What I do know is that Tesla is doing really, really well. I need another sip here. I want to check the chat line, but look at these stats on first quarter light vehicle sales. Light vehicle means not trucks, okay? Yeah, and Larry, you're right. China didn't even make the list. That's exactly right. Exactly right. Means you guys are watching. Good. But yeah, nobody else even comes close to Tesla. It's just an amazing story. So again, snark warning, you guys already got it. As the government sector grows larger, real economic growth declines because the money that is needed to fund the government basically comes out of the private sector. Not every quarter, not every year, the government is growing, the state level or the federal level. But it does continuously suppress government spending suppresses private sector spending. The statement that I'm making does not come from a dogmatic political view, but rather from academic research. It's listed down there, Pew Research. Logic of incentives, the data that's proved this thesis over several decades. This last paragraph is really what I want you to focus on. We measure government size in various ways, but the reliable method that I use is the rolling average of non-defense government spending as a percentage of GDP. Why is this on my show? Because this is a show about financial investing, making our lives better, making ourselves wealthier. I hope that you can then use some of that money to give to philanthropic and charitable entities so that we don't need to rely on the government to do it, because individuals, in my opinion, should be the ones helping those that are less fortunate. Okay, certainly that's the position that Alice and I take. But read through this last paragraph again. The rolling average of non-defense government spending. As a conservative, I am wanting our country protected, and I want the defense of our country at the very top of the list. And all the other things that are on the government agenda can pretty much go by the wayside, almost, but certainly can be trimmed and whatever. Don't you think that in Eastern Europe right now, they're all thinking, wondering if we ought to have a little bit larger defense budget? Not that any one country can take on Russia, but united in NATO, defense is really a government's primary responsibility, in my opinion, and protecting its borders. We're not doing that on the southern border. And this administration is going to pay a huge price in November because of this, folks. The truth is that 57% of Americans pay zero federal income tax. This is from the Internal Revenue Service. The progressive left wants to confiscate assets and drive that number even higher. A good argument can be made, and I said this back in January of 21. Go back and watch my January 2021 episode where I said Joe Manchin, a Democrat from West Virginia, is well likely to be saving America from these extremes. And that is because of Donald Trump, who cost, in my opinion, those 2 Georgia Senate seats. We now have a deadlock Senate at 50-50 with Kamala Harris able to break that tie. But Joe Manchin and Kristen Sinema from Arizona have been the senators, the more conservative senators, even though they're Democrats, to keep these far, far left policies from going through. They're not policies that help you as investors. Now, I realize on this program there are people that are clients, there are people that are just wanting to be educated. And I'm telling you, the policies that this administration, and especially those on the very far left, are suggesting, and more of it suggesting, they're vehemently stating has to happen. They are not in the best interest of you as an investor, and they are certainly not in the best interest of America. Everything free is paid for by someone who works. End of snark warning. If you've had your ears covered, you should be fine going forward. Let's look at a few economic indicators. I have this section of the program because I just want to show you things I'm looking at, not that are driving what's happening right now, but what's going to happen the second and third quarter of this year. Always looking out 3 to 6 months in the economic indicators. Retail sales still very strong. Americans still keep opening their wallets. That's a great thing. Now, as I said earlier, I wanted to show this twice. They're spending money on gasoline stations, food services. Well, they don't have to spend so much at gas stations if these taxes in these big blue states, if you live in a big blue state, write your congressman or call them and say, how about you just waive the tax just for a few months? It's killing me out here, okay? They're spending more money on that, clothing, building materials, and less money on discretionary items, okay? This will flip back because, again, we are a consumptive society here in America. I think the world hates us for that, actually, but too bad. That's just the reality, all right? U.S. savings as a percent of disposable income, that was really high in 2020. We were getting all these payouts from the government to stay home. We saved some of it. I'm astounded at that, actually. And then we started to spend, and then when the Delta variant came out, we started saving again, and now we're back down to where we've traditionally been, which is about 6%, okay? People spend money. So where does the Fed come in here? Well, the Fed is tightening the screws, all right? They haven't had to for decades, except for a brief time about 4 years ago, but even that wasn't very tight. So what's happening? So you keep hearing about 25 basis point moves. Folks, get ready for 50 basis points, back to back to back. That's what the projection is looking at. So remember, if you haven't watched the program before, the Federal Reserve controls short-term interest rates. Short-term interest rates drive long-term interest rates, because if short-term interest rates go up, then longer term interest rates, 10 years, 30 years, should go higher as well, because if you can get 2.5% in a 2-year or more like 3 months, okay, which we can't right now, but it's heading that direction, then you want at least 3.5 to 4 if you're going to put your money at risk for 30 years, okay? This whole yield curve issue is something that you're hearing in the news. I covered it about 6 months ago. I could do it again next month. Let's see if it makes sense to do that. But basically, I just want to leave you with in this section that tightening without turmoil. This is an important graphic because there's only one time frame here, 1972 to 74, oddly enough, when I graduated high school. That was negative when the Federal Reserve started hiking interest rates. Look, all the rest of the periods are positive. They may not be gangbuster positive like the last 3 years we've had in the market, but they are positive, okay? So don't fear Federal Reserve rate tightening. Just don't fear it. Because historically, the data shows, irrespective of what they're telling you in the media, the data shows that we're going to be fine. Over a 3-year period, look at the last one, 2015 to 2018. I told you there was a little bit of a bump there. 8.5%. That's not a terrible return, okay? You're hearing some data about the inversion, and I'm just going to do a little education moment here. I know we're closing in on an hour, guys. Sorry, but there's a lot to cover. When the yield curve inverts, so here's my hand over here. This is short-term interest rates. This is long-term interest rates. So Short term, let's say it's 2%, long term, 4.5%. When times are difficult and the Fed is raising and people get out of their long-term bonds because they're scared, we actually have short-term rates go higher, and that inverts the yield curve. Why is that psychologically a difficult time? Because it means people are investing in very short-term time frames and pulling money out of bonds, which causes billions and billions of dollars to be sold off. Okay, and it basically just is a vote of no confidence for what's happening in the economy. When there's a vote of no confidence in the economy, consumers don't spend money. When consumers don't spend money, companies don't make sales. When people don't make sales, their earnings reports, instead of that 77% that I just showed you, I think it was 79 actually, could be 62, 63%. It could drop to 50%. And then psychologically, we've got to dig out of a recession. But I'm not seeing it yet. I'm just not seeing it, guys. So U.S. housing market, this is astounding. So the median sales price is up 16% year over year. All right, that's the red line. So throughout this Redfin data, the red line is 2022. And of course, we're just 4 months, not even 4 months into the year yet. 51% of houses sold above list price. No time in my lifetime, and I'm 67, have I ever seen this many houses, this percentage of houses sell above list price. It's staggering, 51%. So you would think that then if that's the case, everybody would be listing their homes. No, they're not. The number of listings of homes down 24%. And that concerns me because someone that I know and love may be moving to a place near us, and it's going to be hard for them to find something because it's just difficult out there in certain really highly prized markets, and Nashville is one of them, okay? Less active listings. Look at 2022 down there, 23.9% down from a year ago on the same date. Part of what's complicating this is, no surprise, if interest rates are rising on the short end, the Fed's ratcheting. Remember, I said that's going to drive up interest rates on the high end. Well, 5% mortgage rates, all right? We haven't seen that in a while. Now, it's not uniformly there. If you look at the 15-year rate, you can see the current's at 4.24. If you can get a 5-1 ARM, you're at 4%, but then in 5 years, it might be 12%. I mean, I doubt it, but it could be. Just so for the record here, I always had adjustable rate mortgages because I was willing to play the risk that we weren't going to have a huge inflation hit. Now, the last huge inflation runaway was in the 80s. I didn't buy my first house until 1983. So that was a good choice to do that 5-1 ARM. But just realize you don't have to spend over 5% on a mortgage right now. There are other choices, okay? So obviously with interest rates being higher, the home mortgage payment is going up. Is that stopping people? If the home mortgage payment's going up, it's a higher percentage of their take-home pay. It must be dropping the demand index, but no, it's not. The demand index for houses is still up 5% year over year, exceeding both 2021 and 2020. All right? It's a pretty good time to be a homeowner. It's a pretty good time to be an American. Guys, that's the show. This is everything that I covered. If you're new to the program, we hope that you'll subscribe to us. This is when I like you to type in any last-minute questions. I'm going to take one last sip here. Lot going on. I'm sure I'll have a mid-month update. It's called the CB3 Live Update. And again, if you subscribe to us, then you'll get those notices when I go live or when I upload a pre-recorded video. All right. Anybody, anything? Okay. Well, the next live show, Thursday, May 12th, 4 weeks from now. Can't imagine what the world will be like then. Can you? It'll be interesting to see. And I always close the program with this from 2 Timothy, for we have not been given a spirit of fear. And I really mean that, but a spirit of power, love, and of sound mind. So, as we head into Easter weekend, and for our Jewish friends, Passover beginning tomorrow, it is a difficult time in America, and I understand that. It's a difficult time around the world. But we know a God that I believe wants to bless this country, and we have a resolve as Americans to want to live in a better country today than our parents did. And for my children and your children that are watching, we want the world to be better for you than it has been for us. And we hope you can fix some of the things that we haven't been able to fix. But one thing we can do on this program is to keep you optimistic with realistic data that tells you what's really happening, because I don't have an agenda of fear. I just said that in that statement. All right, so keep tuning in. I always want to remind you that at CB3 Financial Group, we don't just manage your assets. We become one of them. Hope it's a great reflective weekend for you. If you have any questions, shoot me an email, cb3@cb3.com. Give us a phone call. We'll see you back here in a month.